Welcome back. Well, for the markets, it's quite mixed. We have the mid-cap index, which is managing to hold its head above the water, so up around 0.4%. We have the Bank Nifty, which is just about flat at this point in time. So one of the key themes that we have been discussing since yesterday is the impact of the China lockdown due to COVID on the entire API space. We have with us IOL Chemicals and Pharmaceuticals. That's one stock which is on our radar. Besides the fact that we will be discussing the impact of the China slowdown or the China lockdown, it has corrected quite sharply from its fresh 52-week highs. It's currently trading at around 20 times FY22 forward earn, or maybe not forward earnings anymore. Sanjay Chaturvedi, the CEO of the company, now joins in to discuss their business outlook. Mr. Chaturvedi, hi, welcome to the show. Just wanted to get a sense first in terms of what exactly the situation with supply chains, APIs, key starting materials are. With, is there any sort of impact with China undertaking these regional lockdowns?
Most certainly, we are in a global world, and as they say that the wings of a butterfly in one country causes a typhoon in another. So I think in the API industry, most certainly, we are to a large extent dependent on China for certain KSMs and raw materials. So there are two impacts that are happening. One is, of course, in some of these, we have started to see an escalation in prices that range anything from 10% to higher numbers. But more of concern is the delay in shipments. So, and I expect this will continue till the COVID situation normalizes in China.
So what does this mean in terms of costs? There are delays in shipments and there's no clarity on when that can resume. So I'm guessing this would mean elevated costs for a company like yours. How much have you gotten hit already, and how much could you get hit in FY23?
So I think, this impact is not being felt with us right now because all the raw materials that we are consuming now were actually procured a few months ago. But certainly going forward in the new year, we will feel a pinch of it. And right now, it's hard to predict whether this will be resolved in a matter of weeks or months.
Give us a sense of how IBP prices are. They've been hovering between, what, $9 to $11. The last time we spoke to you, it was around $12. How's the offtake been, utilization?
So the offtake continues to be flat. We are optimistic that in this new financial year, these numbers will improve. The overstocking that had happened with our customers in the regulated markets has certainly bottomed out, and we just had a very successful meeting with customers at DCAT. And overall, indications are that the volumes will start to pick up in the new financial year, if not by the first quarter, certainly by the second quarter.
What's the price at? What's the price at currently?
So the current prices are in the $11 range, and it also depends on the volumes. So $11 plus minus a few cents here or there. That's typically the current price for ibuprofen.
Okay, so that's the outlook coming in on the painkiller drug ibuprofen, where the offtake is flat at this point in time and the price is at around $11. But what about metformin, the drug which is, or the API which is used to make the diabetes drug metformin? What is the kind of price hike that we're probably seeing there, because we have majority dependence when it comes to metformin APIs on China?
Absolutely. The key ingredient that goes into metformin is DCDA, and all of that currently is imported from China. That pricing had gone up to fairly high levels, $4,500 a metric ton, and it did, correct itself. And in the last, I would say 2-3 weeks, we've seen some inching upwards. The price for metformin continues to be in the, $5 plus minus range. And the demand is pretty good. The demand is good both in the domestic markets as well as the export markets. So I think companies that are able to manage their imports of DCDA and have working capital available will benefit from this, whereas companies that don't manage their working capital cycles well will not find this to be a profitable business.
Okay, so the non-ibuprofen pharma business, what kind of growth do you see, compounded growth rate are you looking at for that business over the next couple of years?
So, let me give a historical perspective on that. The non-ibuprofen business for IOL about 3 years ago was less than 100 crores. In fact, last financial year, we closed that business below 200 crores. This year, we'll be closing at about 330, 340, 340 crores number. And we expect to see very, very good growth in the years to come in the non-ibuprofen. See, the thing is, when I look at IOL as a business, we essentially have two divisions, the chemicals and the pharma division. In the pharma division, our capacity for ibuprofen is roughly 1,000 tons a month. So we are not expecting to grow that capacity. We are looking to improve the quality of that business and take it to high asset utilization. The real growth for us is actually going to come from the non-ibuprofen part, which is really the most exciting part of our portfolio now.
Okay, all right, that point is taken, non-ibuprofen. But there was some clarity which a lot of investors were seeking with regards to your capital deployment plan. And that was probably expected by December, Jan. Can you give us a sense in terms of how much cash you have on your books currently and what exactly is the capital deployment plan?
So we currently have, about 300 crores of cash on the books, and we have healthy EBIT numbers that come in quarter by quarter. We are looking to freeze our capital allocation plans in the coming few months. We got pushed out because of COVID, and also in the light of the changing macro environment, we decided to take a more cautious approach, and we want to measure twice and cut once. So rather than deploy capital into areas that we are not 100% sure about, we are doing a lot of exercises to mitigate those risks, understand the new businesses that we are getting into, the new products that we should be launching, and allocate our capital accordingly.
Right. So what's your non-ibuprofen target? 300, 350 is what you would talk about earlier. And FY23, what are you projecting?
Yeah, so this year, we should be in the range of around 350 plus minus something. And next year, most certainly, we will cross 500 crores and go to a much higher number.
And the overall revenue and margin picture for FY23?
So overall, I think it's fair to say that we will deliver an EBITDA margin that is north of 15%, between 15 and 18% for the year.
Okay, all right. All the best, and thanks a lot for joining us. So that's the word coming in from IOL Chemicals. But let's move on to a new